So I did the calculation, and you can do it too. The paper dollar, or the fiat dollar, or the Federal Reserve note has lost 99.434%. Yes, that's why I said the dollar is collapsing, the fiat or paper dollar is collapsing. And I think, unfortunately for the world, because this is going to affect all currencies, this is getting parabolic. The collapse or the rise in gold and silver is going to get parabolic, and the drop is going to get really steep. Wednesday, September 10th, 2025, Maneco 64, home of alternative economics and contrarian views. We're going to look at the fiat dollar today, or the paper dollar, because in reality, the dollar is a weight of silver and gold. So technically, it's wrong to say that the dollar is going down, because the real dollar, a $20 gold piece, is always $20. So that's what we're going to look at today. We're also going to look at a few stories that are out. But I also think that one of the reasons this dollar meltdown is accelerating is because of U.S. foreign policy. Even though President Trump says he wants to stop the BRICS, he's doing exactly the wrong things to try to do that. Yeah, we'll look at that too. One thing I wanted to talk about is China CPI. That came out negative year on year, I think minus 0.4. And you see the headlines in the mainstream financial press, like the FT, China's fallen into deflation. Well, a negative CPI is not deflation. Deflation is when the supply of currency and credit goes down, and that's not happening in China. What we're seeing in China is lower prices. So the Chinese yuan in China is buying more, which is a good thing. So just wanted to put that out there. Unfortunately, here in the UK and the US and Western Europe, we have rising prices, and our currencies are dropping. And I'm not saying the yuan is doing any better really on the whole, because they have big deficit spending, a lot like the US. And talking about deficit spending, we had the revision for the jobs number yesterday. Came out at almost 1 million. I think it was 950,000 less jobs from March 2024 to March 2025 than they previously thought. The previous year, they revised it by 800,000. So all these statistics, really, even the CPI, they're just like figments of politicians and statisticians' imagination. The economies are doing a lot worse. So what's really happening to the U.S. economy? Well, the U.S. economy and the U.K. economy and all Western economies, and even the Chinese economy, pretty much stagnant or in a recession. The only reason the numbers look positive in GDP is because of deficit spending. As you can see by this chart, the US is running an average of 6% budget deficits since 2022. From 2019 to 2021, it was even worse, of course, because of what they did during that period, that scamdemic, and I'm going to say it. So the way to calculate GDP is part of the equation. You add government spending, which doesn't seem right at all, because governments don't create economic growth or GDP, right? But they do it in order to fudge the numbers. So if the US was running a balanced budget, the GDP would be negative. And the same thing goes for all other countries in the West, I would say. So I wanted to put that out there. Economy a lot worse. Basically, we are in a stagflation, stagnant economy, and a falling currency, which we're going to talk about, and rising prices. Not good for the general public. It's a third world country kind of environment, and that's why wealth inequality is going through the roof. The very wealthy, they're fine. They're doing really well because they're going to pump up the stock market even more next week by cutting rates. So what else did I want to talk about? Well, this has got more to do with the UK now. We have loads of problems here. They're going to present a budget in November. And the economy is going down the tubes because they keep interfering, taxing. So now Keir Starmer announces that he's going to tighten grip on UK economic policy with a powerful budget board. It says new group has remit to boost growth and avoid another bust up with business. The first thing I thought when I read budget board and boosting growth, I thought of the old Soviet Union. That's what they used to do. They used to think that they could direct the economy from a central place, and that's the same thing that's happening here. These socialists, either they're doing this by design, and I think it's highly possible. They think that they can boost growth. The best thing for Keir Starmer and his government to do is to butt out of the economy, let business do what it needs to do, cut the red tape massively, cut taxes, cut government spending, cut all the rules and regulations of employing people. And I'm not saying employers should be nasty to their employees, but the government shouldn't dictate what employers do. So that's the whole problem. It's not going to help people. And is it any wonder that the pound, just like the dollar, is continuing to collapse? So we're going to come to that now. Just a quick note as well. Well, actually, we'll come to the de-dollarization and multipolarity in a minute. Let's look at the dollar. So I wanted to do a little experiment. And I took some of my old $20 gold pieces. Yes, I do have some. I don't only have sovereigns and Britannias, but I keep these more as numismatic coins. So I've got $20 gold pieces, as you can see here. A couple of them I remember buying on eBay. One is from 1879. The other one is from 1880. And I only paid like £300 for them. And you might think, how come they're so cheap? Well, because it was like 20 years ago. The price was a lot lower. And then I have 1904 double eagle and 1908 St. Gaudens double eagle. Beautiful coin. So we've got basically $80. This is $80, right? The Federal Reserve note that you have with $100 on it, it's not really, it's an imposter. So got $80, and I've got a couple of eagles, which is $10. So I've got one Indian head from 1913, the year, unfortunately, that the Federal Reserve was created. And I've got 1881 one here. So the reason I'm showing you these is not to brag or anything, is just to say that we've got $100 here, right? $100. So what I did, I weighed these coins in grams, then I multiplied the weight by 0.9 because it's 90% gold, and then so I got 151.02 grams. So you can do this experiment yourself as we go further to see how much the dollar has collapsed. So after that, I divided that number, the 151 number, by 31.1035. That's how many grams there are in a troy ounce. Yes, a normal ounce only has 28 grams, so for gold, you need to remember troy ounces. So that number, 31.1035, is a really important number. So I got 4.855 for troy ounces of gold in $100. That's what $100 is. So after that, I took the price of 3,645. I did that yesterday. Right now, as I speak here at 7:30 a.m. London, we're at 36.43, but this will do. So yes, in fiat or paper dollars, this is worth 17,697.94, which is like, seems crazy, doesn't it? Just a few coins worth those many paper dollars. So, and then I calculated how much, the $100 currency has devalued versus real gold. And the reason I did $100 is because there's an old picture that I wanted to show you here. It's a really famous picture. It says, on this day in 1929, and I think this was October 30th, it was from the Chicago Sun-Times, Walter Thornton, a bankrupt investor, is seen here trying to sell his car for $100 cash after the stock market crash. Yeah, some people might think, well, it wasn't that much money, but it was that much, right? So I did the calculation, and you can do it too. The paper dollar or the fiat dollar or the Federal Reserve note has lost 99.434%. Yes, that's why I said the dollar is collapsing, the fiat or paper dollar is collapsing. And I think, unfortunately for the world, because this is going to affect all currencies, this is getting parabolic. The collapse or the rise in gold and silver is going to get parabolic, and the drop is going to get really steep, as you can see by this chart here. And I've touched upon this chart, and I did an update on it yesterday. And you can see, you just do the price of gold, and you do 1 divided by the price of gold on tradingview.com, and it gives you the opposite of the normal chart, which goes up, right? So this gives you a good idea, and it says 0 really here. The thing is that from 99.43 to 0 or to 100% loss, that will be that's the period we're in right now. I can't tell you exactly how many years it will take, but not more than 10 years. I think we're in the end game, and what it will mean when it's 100% gone is that you won't be able to exchange your fiat dollars for these, and that's why it's so important to be able to stack some of these, and also silver for that matter. And we can look at silver later on in another day, but I wanted to touch upon gold today. So you can see here that there was a devaluation of the dollar back in 1934 by President FDR. I think it was January 30th. He devalued the dollar from or revalued gold from $20.67 per troy ounce to $35. You can see that since 1833, it was at that same level. For 100 years, the dollar was real, was fixed weight of gold. They kept it at 35 from 1934 to 1971, and then they did the unthinkable. President Nixon, he detached money from reality, or the currency from reality, into mythical values. And that's why when you look at charts of any economic or financial indicator from a long-term chart. You see that in 1971 things changed. It was because of that. And so the dollar is basically detached from reality. And unfortunately, people that hold dollars or treasury bills, notes and bonds, and euros, pounds, yuan, any fiat currency, they're going to be left holding the bag. And that's why I've been warning people about this for so many years. And I think we're very much near this end game. One of the symptoms that I've looked is to do with these books: Fiat Money, Inflation in France, Post-Revolutionary France, 1790s, When Money Dies, Weimar Hyperinflation. And both these books talk about how the first thing to go is the public's ability to buy food, how groceries really start picking up. Of course, iPads and computers and things that aren't really basic necessities, they might not go up, but even those go up. So yeah, I highly recommend you read these two books. I've heard a lot of, well, and I can see it as well when I go shopping sometimes, not very often, but I've heard from like my niece in the States, like her grocery bills have gone through the roof in Florida. And I've heard it from other people. I mean, food is becoming unaffordable. Of course, for the very wealthy that have a huge portfolio of assets, they're doing well. Food is a small percentage of their income. But so the powers that be, they don't really see this. They're blind to it, and that's why I think they're always wrong, and they never do the right things. Even though I think some people might argue this is all by design, and that's why I wanted to talk about President Trump, because what happened yesterday vis-a-vis Qatar and Israel. That's in my opinion, and I'm not making any political judgments, I just think that that's going to unify actually the Middle East, the Arab countries against Israel. That's not going to help the US either. The other thing that Trump announced yesterday is that the EU should hit China and India with 100% tariffs to pressure Vladimir Putin. Well, they're not going to do that. They're going to double down, and they're going to focus on multipolarity. He's just given another impetus to BRICS unity. That's what I think is happening. And the quicker BRICS gets its act together, and I'm not saying BRICS are going to be perfect, and I don't think they will, but what it means is that the US is going to be hurt by this, because countries won't want to deal with the US anymore. So if you don't deal with the country anymore, you won't need its currency anymore. So a lot of those dollars that are offshore, held by these countries, they're going to come back to the US, and that's going to create a tsunami of supply. So that means less value. It's the law of supply and demand. So yes, is Trump doing this by design? It's possible, because Trump in his business career is known to have driven many companies to the ground and filed for bankruptcy, those companies, and reorganize them. Can you do this with a country? Well, maybe he thinks he can. So I would say that this is dollar demolition by design. That's the policy that we have here. And the other thing is America's foreign policy is accelerating de-dollarization. And the last thing I'm going to say is, have you got gold? Because you're going to need it. Anyway, with that, I'm going to wish you all a very good day. Take care. Bye.